Folks, how are we doing today? All right, so today we're talking about the market decline. We've seen Bitcoin decline, we've seen the market decline, and it may continue to decline, right? And folks in the comments have been wondering what happens with our covered call solutions? What happens with ETFs in terms of price decline? What will happen to the yield? What will happen to the assets? Will they decline in correlation to the underlying? Will we be covered a bit because of the income? Let's jump into a calculator that I prepared that looks at this exact analysis. Okay, let's just jump right into it. All right, guys. So we are here at the BTCI decline calculator, right? So a lot of folks are focused on Bitcoin and what will happen in a decline with Bitcoin as it relates to recovered call solutions. So today I'm going to focus on BTCI. As we all know, BTCI, what is the underlying asset behind BTCI? Well, it's Bitcoin, of course. Now they use the ETF, maybe they use a HODL, I believe they use, but at the end of the day, it's spot Bitcoin. It is Bitcoin. Um, and so we have our calculator here that's going to look at what will happen to BTCI and what will happen to Bitcoin as it relates to a price decline or various price declines. All right. So in this case, we start with our simulation. We start with Bitcoin at today's current price of 113K, and let's assume it'll go down by 30% in the next 6 months. 30%. All right. So we're going from 113K to 79K in a 6 month period. Okay. Similarly, BTCI, which is today's prices of $60.24, will also decline. But how much will it decline? All right. And so the first thing that we have to analyze and inject here is its correlation, BTCI's correlation to BTC, which is effectively 80%. Now, you can look this up online. You can evaluate it. It requires a bit of calculations to come up with this beta. But effectively, the correlation, it's about 80% correlated. Why is that? Well, because of the income that BTCI provides, it does cushion the blow a bit or cushion and adjust the correlation between BTC and BTCI, and as a result, we get to 80%. So just respect that 80% is the correlation. And again, if in the comments below, you can comment if you analyze this differently, but 80% is the correlation beta. All right. So our starting yield for BTCI is right around 24, 25%. The option periods, it's a monthly decay. All right. And the volatility that we do see with BTCI and BTC, and that affects its premiums, its option premium. It's about 20% vol. Okay. And that's also something you can look up. But on average, every month, you see about a 20% volatility as it relates to BTC. So that's something that also will affect its premiums is the volatility per month. Okay. And we've assumed a holding period of 6 months for this negative 30% decline. All right. So, simply put, when it comes to BTC, you can see the screen here. When it comes to BTC, what's going to happen with a negative 30% decline? BTC is going to decline by 30%. Simple story, right? Well, BTCI is only going to decline by 24%. All right. And it's only because its correlation is different and truly because of the income padding that you'll get. All right. So after negative 30%, really BTCI is going to change negative 24% for an ending price of $45 from the initial price of 60. So when it comes to total returns, BTC will decline 30%. And generally speaking, BTCI is going to decline 24%. You're going to get that cushion. You're going to get that cushion blow with your income provided, right? It's not going to be a perfect correlation. But on the way up, let's say we change this to positive 30%. It's the same story in an inverse, right? Let's go with 25% increase, right? In the same vein, on the way up, you'll get the negative side of you will not see as much upside on the way up, but on the downside, you will be more protected, right? So BTC, if we gain 25%, BTCI would likely get only 20%. So it's a benefit in terms of hedging and protection on the way down, but a deterrent on the way up. But then again, we are income focused investors here, so we are okay with sacrificing a little bit of total returns for the benefit of the income, right? So what is going to happen with a negative 30% decline by way of yield? All right. So we started the yield with 25%, but as the price declines, and if we can maintain the same volatility, well, actually the new yield will go up. So we'll see a 30% yield. We'll continue to see a higher and higher yield as the price goes down, assuming the same volatility, and that will play itself out, right? So if it's negative 30% decline, you will see a new yield of 30% versus the 25% that we had initially, or maybe 35%, negative 35% decline, you'll see a 31% yield. So your yield will change. It'll go up when your price declines. It'll go down as the price appreciates. So long story short, because of the income and the covered call structure of BTCI, you're cushioning your blow on the way down. All right, you're going to get you're not going to be impacted as much by way of price decline with the cushion, but on the way up, you're capping your upside. But that's the trade off. That is the trade off that we're all playing, and that's the trade off that we're okay with. Guys, I'm going to throw this calculator in the Patreon community. If you want to sign up to the Patreon community, please, I jump to the link down in the description. It's $5 a month to get access to all the calculators I throw in there every single day, really, and also $15 a month if you want financial coaching. But outside of that, guys, just want to do a quick look at what's happening on the way down with BTCI. Are all your AdSense going to go wiped away? Absolutely not. Your downside will be cushioned, albeit somewhat, not all the way. And of course, this is just a simulation. But guys, let me know what you think in the comments below. Sub to the channel, and all the best. Cheers.